I'm not working for me to reinvest in somebody's get rich quick scheme. I am working and building a machine called a business to set myself and my family free. And that freedom account has a number that when I reach it, I am now free.
Welcome to the Profit Answer Man podcast, where business owners learn to scale their profits and cash flow and work less doing it. You built your business to fulfill your dreams and serve your mission. You're the backbone of America, creating the jobs and opportunities that keep our economy moving. And for that, you deserve to be well rewarded. We're Profit First certified. It's the first baby step in a journey we take our clients on, building cash-rich, margin-strong businesses that don't suck the life out of you. Check out the first 13 episodes of the podcast. It's Mike Michalowicz and my review of each chapter of the Profit First book. Around here, we speak cash flow, profit, and practical execution. No accounting jargon, no fluff. Most accountants, they might help you save on taxes, but they'll crush your cash flow and make you look unprofitable. That's not just a poor decision, it's a liability. We help you focus on what you love. And when we partner together, we become a profit center for your business. If we don't deliver a massive ROI on your investment in us, fire us. Want to see how it all works? Watch the video version on YouTube or head over to ProfitComesFirst.com to grab your free copy of the Profit Blueprint book and start making profit a habit. You built this business to serve your mission and your freedom. Let's make sure it pays you back big. Most business owners hustle for revenue, but lose track of profit and cash flow. You don't need to grind harder to grow. You need proven systems that make your business more profitable, your cash flow more predictable, and your life a whole lot easier. That's what I do. I help you to turn confusion into clarity and growth into real wealth that provide you the time and money freedom you deserve. We're back to talk about how to make more while working less. No more grind, more cash. Our guest is Jason Sisneros, and he knows that lesson better than most. After crashing 3 businesses and falling millions into debt, he rebuilt from the ground up, eventually selling 26 companies with over 6,800 employees for over $60 million, all without investors, debt, or partners. He is now founder of Build to Exit, where he helps business owners design companies that create both wealth and freedom. He's a sought-after speaker, turnaround expert who's helped countless companies. We're going to talk about the failure into freedom path, how the mindset have to shift to be able to do that, and the 3 types of business exits. We'll give you practical advice today to escape the chaos, protect your profits, and ensure that your business works for you. Let's dive in. Welcome to the Profit Answer Man, Jason Sisneros. It's great to have you join us today.
It's great to be with you, Rocky. Excited about our conversation.
And you're back again. You were on my other podcast, Rich Your Soul, just recently going.
It was a wonderful show. You're a great host. Everybody on my team, everybody that's watched the show, just raved about how well you do your interviews.
Well, thank you. And we're back again for more. Today, we're going to talk to business owners. Can you share a little bit about yourself and your business?
Yeah, absolutely. Again, it's great that we're talking to business owners because I am one. I've become a giant advocate for the SME community, which is, as you know, small and mid-sized enterprises, 0 to 499 employees. That's how they decided to designate us, right? There's 33 million of us, so I've got a big family, and you've got a big family. You're a big part of that. But I started out in life in a situation, which was a big subject of our last show, which was not really the best startup. I had a father that went to prison for attempted murder, me and my mom. And what I have found about most business owners is that all of us have had some kind of trauma in our life, which makes us a little bit rebellious, and we don't want to work for other people, or we physically can't because of our attitudes, stuff The only real option and outlet that I had to make revenue and to build the kind of life I wanted for me and my family was to start my own business. And I did that and promptly crashed 3 businesses in a row. As I was learning, those were my learning days. I was able to I had this amazing opportunity after those 3 failures. I fell into a very deep depression, right? A lot of what you do and what I do nowadays on the advocacy side is don't go bankrupt. Like, do the things that you can to keep your business from going bankrupt, because everybody's like, well, you'll just pick up and start again, or you'll go get a job. That's not what happens. You really fall in. I did anyway. I fell into a deep depression. I wasn't qualified really for any other job. And it took me 6 years after the hole I dug for myself, which was $2 million plus, to dig out of that hole. So don't do that, right? That's what we call, in the world of exits, we call that an involuntary exit. So don't do that. Then when I came back, I had this amazing opportunity to travel with Tony Robbins. And I had my notebooks from my failure, and I went on the road, and every business owner that I could find that was in business longer than 5 years, I would ask them a series of questions. I would take my notebook. I would say, look, I did this mistake here. What would you have done instead? And so after 4 years with Tony, I ended up with 3 new notebooks, and I got a call from a friend of mine. And he said, hey, Jason, I'm going through something that you went through in one of your business failures. Could you come and help me? And I was like, oh my gosh, I have 3 notebooks of ways to help you now. Actually, I had 6. I've gotten paid more in my life for the first 3, which were my failures, than I have for the second 3. And I helped him. I made some money while I was doing it. And then I made some money on the upside. Then I got referred and became a turnaround specialist. So the worst deals, the worst businesses in the worst shape would come to me, and I would turn them around. And then I started doing that, made them a bunch of money, decided I would start buying companies that were challenged in my own life, and built up a private equity firm of my own, which I sold. At the height of it, I had 36 businesses. When I sold 26 companies that had 6,800 employees for a number, a little north of 60 million, with no investors, no debt, and no partners. So that's my history in a bucket. So, what does that bring us to now? From the last show, that I do a lot of philanthropic work. We put on bulletproof vests and we go get kids from the sex trade. My first love was domestic violence because of how I was raised. I've done a lot of charity work there and feeding people. And then we started this brand called Built to Exit. And that's kind of what we're going to be talking about today, which is the skill sets, processes, procedures that every business owner, when you accept the idea of everybody exits how matters, that gives them that roadmap. Either we help them or we have the roadmap for them to be able to optimize their own exits and build wealth and freedom for their own families.
You said a lot there.
I did, and I did it quickly. Are you proud of me?
You did it quickly, of course. You're good at this. So we're going to talk about Profit First, but Profit First came out of Mike's bankruptcy.
Yep.
Right. And that's kind of where he hit bottom. At the same time, I just finished Gino Wickman's book, Shine. And Shine really talks about every entrepreneur has that thing in their childhood that caused that pain that has pushed them, just like you, to be able to kind of do that. And then, of course, my other favorite book, which we didn't talk about, is Keith Cunningham, who starts off with that favorite question of, if you could go back and remove 3 of those bad business decisions, how much more money would you have? For most of us, it's millions. At least for me, it's millions. So preventing the mistakes by listening to others is super, super smart. I do want to get to the everybody exits. Before we do that, 2 questions. First off, how has that been helpful for you?
Multiple ways. It's a great book, a great philosophy. But one of the things that we kind of hard coded into our process was the idea around the envelope system and having multiple bank accounts. What that teaches you is that all money is not equal, right? Profit is much different than operating cash flow. Operating cash flow is much different than free cash flow. The holy grail of why you're running a business is the free cash flow, money you can take off the plate, and it doesn't affect or impact your growth. And so that taught me and hard coded that what we talk about when everybody exits, well, everybody is running a business, whether they articulate it or, here on your podcast, this simple concept that you're building a business to create freedom, right? And not the weak freedom. What we're talking about is that your bills are going to be taken care of. If something happens to you, you're taken care of into old age, into passing. And by the way, maybe you leave some for your loved ones, for your kids or whatnot. And so that envelope system really hard coded in me and then became part of my system to say my freedom account gets paid every month, because that's why I'm working. I'm not working to impress people on Instagram. I'm not working for me to reinvest in somebody's get rich quick scheme. I am working and building a machine called a business to set myself and my family free. And that freedom account has a number that when I reach it, I am now free to start another business, free to start a charity, or free to do whatever, travel the 7 seas. So that really impacted my life and became, like I said, hard-coded tactical advice that I put into my own life and now have helped other people.
And I know the last time you were on, and we don't need to go back to it, but we talked about business owners reinvesting in their business from that money. Mm-hmm. And the fact that if you're going to reinvest in your business, you better treat that money like you borrowed it from the mob and make sure you pay it back, because I think very few, if any, business owners will pay back their investment. They call it an investment. What they're doing is they're burning cash like there's no tomorrow, which puts them in a difficult situation.
That clip, by the way, has gone viral.
Yeah, it has.
Me saying, if you're going to lend yourself money,
I know
it's gone viral. So thank you for that.
You're most welcome. When people get in that situation where they're behind the 8 ball and you come in as a turnaround expert, what are the top 3 things you're going to do right up front to help? Clearly, it takes a while to come out of the hole. And I don't think business owners understand that. You put yourself in a hole, it's going to probably take you a multiple to get back out of it. So what are the first top 3 things you do to get them out of the hole?
So the first thing is doing an honest, deep dive assessment of what you have. Okay, that's step number 1. We have to identify all of the value, relationships. There's so many, everybody's like, well, the asset that everybody talks about is money. Obviously, that's important. But there's relationships that you have. There's clients that you have. There's employees that you have. There's different programs, SBA, otherwise. Let's assess where you are. And very few companies know how to do that. And even fewer companies actually do it. So that's step number 1. Step number 2 is we have to get crystal clear on what it is that they originally intended when they started this business. In other words, the end game. And that end game, everybody's like, well, how does that help me if I'm broke? It changes everything, because it reestablishes in you the cellular drive of which you said, I'm going to go into this thing that 95% of people fail at, and I'm going to do well at it. And it reinstills that in you and go, oh, that's why. I just got done speaking in Houston last week. And I had 3 or 4 people when I was talking about this from stage start crying in their seats because they're like, oh my God, I forgot why I started my business. And you brought that back out in me because it's so important for several reasons. But number 1 reason is it wakes up that competitive fire back in your gut. And number 2, you have to have a finish line. If we assess where you are, now we know where we're starting the game. Number 2, that's my end game. So then I will know every behavior, every action, every decision that I make and apply to my business, whether it's taking me closer to or further away. We lose that true north sometimes as a business owner because we become firefighters. Okay. Third piece is that radical measurement of every decision that you make and its outcome. After you've got the assessment and the end game, you assess every behavior. And here's a really good gauge. Most businesses don't get into trouble without first having gone through a period of success. Okay. And so what you can do as a hard piece of advice is go, okay, let me go back to when we were doing well, when I was making the kind of money I thought I was, when I was profitable, when my employees were happy, when my customers were happy, and when I had a little bit of time for me and my family. This is what a lot of people are like, oh, you bring in a turnaround specialist. This is the first thing I do as a turnaround specialist. When were you doing the best? And we reverse to that period, and I ask a series of questions. What were you doing for your customers that you're not doing now? What were you doing for your employees that you're not doing now? What were you charging then? What was the environment like? What was your competition? And if you can just simply, the very first thing we ever do in turnaround is go back and recreate what they had already done. And you ask that question, they go, oh, you know what? This employee, I was treating this particular way. Oh, you know what? I was going to 4 or 5 events per week and I haven't done that for a while. Oh, we were priced at this level. And since then we've actually gone up in price or down in price. And oh, back then we were doing this thing for our customers that we stopped because we thought it was costing us money, right? So those things avail themselves without any other work than just going back and saying, what did I do when I was the most successful?
Going back to what worked. And
yes,
that makes a lot of sense in being able to do that. And a lot of what you do, even as a turnaround, we do with our new clients. We want to know what got you here, where are you trying to go, and what are your current struggles? And then we help them based on their financials build that path forward to be able to have that freedom. I mean, at the end of the day, I think business owners do this to make money, to have time freedom. And if you're not making money and you don't have time freedom, then get help.
It's miserable.
Yeah, it's miserable, but get help. It's not that far from where you are to where you want to be. It's just you don't have clarity. And I think that's the biggest problem for most business owners. And what we try and do is give them that financial clarity so they can make the right decisions. And once they can do that, they're off and running. And if you're not in the hole, it doesn't take a lot to get from where you are to where you want to go. If you are in the hole, then we got to fill it back in. And that takes a lot longer. So you keep saying everybody exits. Let's start with what does that really mean? Because I don't think a lot of business owners think about their exit.
They don't. I know I certainly didn't. I can't remember the first time it was ever really exposed to me. But even when it was like, I'm never going to be able to sell this company. Like, it's me, right? Yes, I have some employees, but it's me. And I wish I could go back to I get asked that a lot on podcasts. Like, what would you go back and tell your younger self, right? First thing, Keith Cunningham was my mentor and still is my mentor, but I sat on his council for 10 years. And so that idea, there's so many brilliant things that come from him. But at the end of the day, what I would do is I would go back to myself and I would say, okay, whenever you're starting a company, you begin with the end in mind. Another simple concept, a fortune cookie, if you will, right? But it's so heavy in application and so heavy in wisdom that if you stop this podcast and you go, all I'm going to do right now is I'm going to imagine my end game and that this machine I'm building called a business is going to be the vehicle that delivers that freedom for me, right? There's 3 kinds of exits. I already talked about one, which was an involuntary exit. That is one where you go out of business, you pass away, you get divorced, you have a partnership that goes bad, you have a health issue. There's a lot of different things that cause you to go out of business in an involuntary way. Okay. And that's 95% of the businesses that start. Number 2 is called dictated. Dictated means you've built one company your entire life and you're going to go through this process, which is a completely different game than your HVAC or your plumbing or your painting business or your whatever company it is. A completely different game with a completely new set of skill sets, which means that you're going to be like the guy that goes in with your car and you're going to go, I'm going to go beat this guy up on the price of the car. When they sell 30 cars a month and you maybe in your life will sell 7 or buy 17, like 10, 15, 17. You're dealing with an expert when you get ready to sell that business, and they're going to dictate 3 things: the price that you're going to get paid, the timing of by which you're going to get it paid, and the terms of the entire agreement. Dictated means that you are the recipient of the person that's across the table from you dictating all 3 of those. Whatever you think you're going to get for the price, you're not. Whatever you think, how fast you think you're going to get paid, you're not. Whatever you think the terms are going to be, they're not going to be favorable to you. Okay. That's a dictated exit. What we talk about and what everybody should focus on is a custom tailored exit. That means that you have to avail yourself of an entirely new set of skill sets to be able to sit across the table from somebody and maybe not dictate, but at least be in the negotiation chair of price, timing, and terms. So that's what I'm talking about when we talk about timing. And what we do at Built to Exit is we inform and educate business owners, optimize phase, pre-exit phase, due diligence while you're sitting down, and then post-integration.
And that's a big part of it. I think more often than not, what I hear is business owners want to sell when they get tired.
Too late.
Like you said, it's too late. And honestly, that's where we help a lot of times is if you're tired, what I have found is if we can get your finances going again and we can get you out of the minutia of the business, all of a sudden business owners start to love their business again.
Isn't that weird?
It's weird. And so, that's what we try and do is to help them love their business again and get the rewards they were supposed to and be able to do that. But there comes in a time or whatever in life that they decide they want to do something different. And so if they want to sell, that's cool. The cool thing is when they follow our systems, their business is far along the way. Now you just got to come in and polish it up at that point. But a lot of the things that they needed in place or the concerns have already been majorly addressed. So you can get to that end game so much faster.
Yeah, 43% of the people that bring us in on the brokerage side to help them sell. 43% of them, because you have to go, anybody can polish up what they have and sell it. But if you're smart, you want to optimize that sale, right? So we have an optimization process that we take people through that 43% of our clients that hire us to sell their business decide not to sell. Because to your point, they now have all their time back. It's producing more money than it's ever produced. And we've put a management team in place so that they're not needed. And they go, but now it's ready to sell because it's been built to exit. So that's a big number and great because that's an outcome for people. On the other side of that, again, we talked about it being too late, but really building your exit, everything that you teach, everything that you talk about, the profit first perspective and philosophy is get your business built to exit so that you can exit it at any time. That's really the smartest thing for you to do. To really polish it up. I'll tell you, the average time is, I think, about 14 months when somebody comes in and starts due diligence on your business, which is in and of itself a strategy to knock down the price of your business. Okay. But it's like the walk around on a car. Oh, you come in, I got Kelly Blue Book and it's worth $20,000. And then they're like, okay, great. We'll take that price. And then they walk around, they go, oh, look at your tires need to be replaced. In your mind, less 19,000, right? And then they go, oh, look at the crack in your thing. And you go, oh, shoot, 18,000. They haven't said a word yet. They're just pointing out the flaws, right? To drive down the value of your trade-in. Same thing on a business. 14 months is there really not as a thing. It is due diligence. It's finding out all the stuff, talking to your customers. It's making sure the employees aren't going to leave, making sure there's no dead bodies buried around. But it really is a tactic of the intellectual superior of the person who has bought 10, 15, 20, 100, 200 businesses in their lifetime.
As you talk about that, I just realized something. Most business owners, unless they've been in business a long time, haven't faced a recession yet. They could have faced disruption. There's been a ton of disruption in the business world. The latest is ChatGPT comes along. It's not really putting businesses out of business, but along the time, Walmarts and Amazons and technology changed the game. If you're in and you're watching your trends, these things happen relatively quickly. But if you're able to sell, it gives you the ability to get out before the wave takes you out, right? You're at least in position to do that. What are you seeing currently economically? Are you seeing certain waves that business owners should be aware of that may cause them to face disruption that they're not even aware of yet?
Let me put some emphasis before I answer that particular question, some emphasis. I sold in February of 2019. 2020 and COVID was right around the corner, even though some of those businesses, because they were commercial janitorial, did really, really well, right? During that downturn. But to have 6,800 employees and have to go through that would have sucked, period, right? But I was ready to sell and I dictated all of those terms. I was running the boat on that sale. So just to put a fine point on the fact that that is absolutely necessary for you to be prepped up and ready to go. Now, as far as trends, here's some things that I don't hear anybody talking about. The economy from Main Street is in a massive recovery right now. There is more money, more hope, more enthusiasm, more work in terms of revenue for small and mid-sized companies now more than in the last decade. People aren't not seeing that or not saying that yet. Now, the other side of this is that I see, because there's been this massive wave of acquisitions from private equity firms, and then you have a private equity firm which has a real solid definition. They're good at what they do. They acquire businesses and they improve the net worth over time. Okay. That's a real private equity firm. Now, there's a whole bunch of people in the last 10 years, especially, that have called themselves private equity. Private equity is the highest performing return on your investment of any other vertical. Real estate, Bitcoin, the stock market, they outperform everybody because they found, what I know and what you know, is that small and mid-sized businesses are more dependable. They have systems, they have processes, when they're purchased properly, and then they can spool them up. And so they found that that was a great place to invest, is in our small and mid-sized entities. Now you've got this other group that came in and they're just sloppily buying stuff for too much money. They don't know what they're doing. Things are falling apart post-purchase. There's going to be another wave. And that wave is going to be from these junk private equity firms that are out there giving back the businesses. And it's happening. We have 7 that we're working on, not in our pipeline, but we're working on right now, that are being given back to the original business owners because the private equity firm that bought them had no idea what they were doing. So I see a separate wave coming all the way back in the economy for people to be able to take their companies back, and for them to be able to pick up companies that fell apart for pennies on the dollar from those private equity firms. And because the other business owners are like, I already sold, I don't want it back. Those are 2 trends that people aren't talking about. I do see a lot more regulation. I see a lot friendlier environment for small and mid-sized business owners over the next, at least 4 to 5 years.
And I would agree with you. I think what I'm seeing in the private equity space, and again, I don't know who's behind all of them. I know how those businesses start to treat people.
Yep.
They don't treat the workers well.
Nope.
And they hug up prices on the customers.
Right.
And what that does is it creates a competitive market that a small business owner can compete against those high prices.
Totally agree.
The other thing is, I think with so much fraud and fake going on, people have always wanted to do business with people they know, like, and trust.
Bingo.
They're going to go back to, I want to do business with my local plumber. I know him. I see his kid at school. Like, people are going to want to go back to that. And so I think those opportunities are going to present themselves, and we're going to see that shift. We're seeing it globally. And I think you'll start to see it over time with business owners as well. It just takes time.
Here's physically how we are preparing for what you just said. There's a strategy that we call grouping. I haven't heard anybody else talking about it. I don't know if we invented it. Where I came up with it was with another M&A partner of ours that we work with that's an attorney. And we sat down and we said, private equity is doing what they do. And then you have this other concept in private equity that's called rolling up. Okay. Buying several things, and, grouping is how we're addressing this. And we have 4 right now that we're working on. We have not taken one to market yet, but we're close. And what we did was we said, rather than the private equity firm getting all of that, let's say that you live in the middle of Kansas. You have an EBITDA of about $500,000, right? And you do HVAC. And if you have geographic barriers and hindrances, that if you did 80% of the business in your neighborhood, you could get to 750 EBITDA, right? And we know that there's a big multiple shift when you get to 5 million EBITDA. We know that. You can sell your company for 3 to 4 all day long and twice on Sunday if you want, 3 to 4 times EBITDA. But when you hit 5 million, now you're getting average, this is not Jason, this is data, 6 to 12 times EBITDA. So what if we went out and did the same process, but we coupled Kansas 500,000 with Texas 1.5 million, with Ohio 1.5 million, and we got all of them to a $5 million EBITDA, and everybody makes more money because now you're a 6 to 12 times EBITDA, and now you sell that to a private equity firm or somebody that wants to buy that grouping, right? Physically, just basically in reaction to what you just said, we are already ahead of the curve on how to address that with businesses that don't have a chance of 5 million EBITDA, but when they couple with somebody else, they do. One brand, all the scaling, all of the things that come along with that. That's literally what we're seeing in the marketplace, and we're reacting to it already.
Interesting. We do something a little bit different. And mine is more on the marketing side in the sense that, hey, if you're a plumber and you're grouping a business, make friends with the roofer, make friends with the driveway guy, make friends with the window guy. And now, if you're a group of 10 people, you don't need to pay anyone. You don't need to do anything. You start referring within your network. You're all going to get essentially free marketing. Now, coming back to your thing, a lot of times these people might be in and around the same business place because, they're all starting out or they've been in a couple years. They've been watching each other. They can all come together and go to somebody and say, hey, you've got a whole group of us. And we already refer to each other. We already know how to do that. And so that's one kind of grouping. The other grouping I tell those people is, look, we got to take money out of your business because we never know. If you've got all the trades, I want you to go and buy houses because you've got all the trades to remodel, flip, rent. You can do it all. And that's where you park your excess cash. I mean, there's a million ways to take a concept or a model and then adjust it to you, what you want out of it. And even if you can't find those people, if you've got a pretty successful business on the electrical side, like, let's do plumbing, but I don't want to do plumbing, you can seed somebody and they can be under your umbrella and let them run that part of it. You just give them some startup capital and you start referring business to them. They start referring business to you. And since you own both of them, it's great. But maybe in that one, there's a partner versus your main business doesn't have a partner. But there's a million ways to do this. And you got to figure out what works for you.
I love it. It's diversification. It's diversification. Your concentration risk for most people is single point of failure is their business. And the more that you can diversify, the less likely something can happen to your business and you're still going to be okay.
And again, I'm going to be back to the trades, but if you think about it, when the plumber goes in and he cuts open the walls, it's nice if he happens to know the guy to fix your wall.
100%.
And while you're in there, you got to do some electrical. Oh, at least if you're all friends, you're not stuck waiting on somebody in it. You're all working together, even though you can run your own companies. You got to figure that out in your particular vertical. It works for everything beyond the trades. You just got to figure out how it works for you.
Excellent point.
Biggest mistakes you see when it comes to finance with business owners?
Boy, where do we start? All I have to do is look at my past, right? I would say that one of the biggest mistakes is that revenue equals success. That's a big mistake. You start out and you're like, I'm going to make $5 million. And then you're like, oh my gosh, I just sold $5 million. And you're like, why am I overdrawn by $250,000? Right? So revenue is not that. Now, even profit is not that. And even operating cash flow is not that. The biggest mistake that I see is that business owners do not understand the concept, two concepts. One is free cash flow and two is the velocity of cash. Those two concepts can change your mindset to fix all of the issues. So free cash flow, all you do is follow profit first. That's all you have to do. So just take that free cash flow and take it off the table. Taking money off the table is a must, right? The velocity of cash is the concept of taking the money that you're making and speeding it up. Like we were talking about borrowing money from the mob. If you're going to take money from yourself, you're going to lose a finger if you don't pay that back on time. Okay. So what are you going to put that in? And it sets your mind to say, okay, I'm going to put that in something that is going to grow faster than being in my business so that I'm going to make more money faster. And that is not a philosophy. It's something that you plan out. It's your investment strategy. It's whatever you get comfortable with, your wealth advisor or yourself or your wife or whoever it is the faster that you can get that money working for you, the faster you're not going to have to work for it.
And I agree with you. That's a big part of the other thing. I actually came from the personal finance side. So when we look at businesses, I'm always about let's take money out of the business and then let's make it grow somewhere else. This way, no matter what happens in the business, you're always protected. You never have to worry. And if you do it well, we've had a lot of business owners just even reallocating their working capital. A couple of years ago, nobody knew what the word interest was. Today, we can actually make money on money that's just sitting in the business. And so we look at all of those different things to say, how do we ensure that you are always safe and that no matter what happens, you survive, even if the business doesn't? And so I'm a big fan of that and making sure that they actually build wealth. If people would like to learn more about you, your programs, if they're thinking of exiting and want help, how do they go about that?
Pretty simple. Jason Sisneros, it's behind me here. So my wife got me that. I love it. It's jasonsisneros.com. You can reach out there, or built2exit.biz, where we've got a cool little assessment that people can get their business assessed and stuff like that for free. But those are the two greatest places. And then also on your show, by the way.
Thank you so much for joining us today.
Thanks for having me, brother. Thank you for everything you do for all the SMEs in the world. If they don't appreciate it, then they're probably not going to be in business for very long. So they should share, they should they should do all this stuff with your show, because I'm on a lot of them and yours is of high value. So thank you for having me on.
And thank you for joining us and sharing your wisdom.
My pleasure.
Jason was also on my other podcast, Richer Soul. You'll get his backstory and how a lot of this happened, where he started, and how he got to be where he is. You want to hear it? Check out that full episode. Link in the comments. Let's face it, most business owners start out chasing freedom, but somewhere along the way, the business starts running them. Today's conversation should remind you that you need more clarity, not more chaos. It's time to make the change. Bottom line, every business is going to exit. The question is how. You can build a company that traps you or that funds your freedom. It all starts with taking control of your profit and cash flow, just like Jason talked about today. So ask yourself, do you have issues with money, people, or systems that are holding you back? What's one step you can take this week to create a business that works for you instead of one that drains you? If you want help building a more profitable, predictable business that's truly built to exit, reach out. That is what I do. Because you don't need more resources, you need to be more resourceful, and we'll show you how. And we'll always focus on your bottom line. Thanks for listening to The Profit Answer Man, where we believe more revenue doesn't mean more profit, and the bottom line is what really matters. If you're ready to stop living check to check, take control of your cash flow, and finally get paid what you're worth, we should talk. We work with 7- and 8-figure businesses and well-funded startups. If you're a smaller business, check out the Profit Blueprint program. It's a do-it-yourself solution that also can come with my direct guidance in the same level we give our one-on-one clients. When you're ready for results, book a discovery call. There's a link in the show notes or at profitcomesfirst.com. You'll be speaking and working directly with me. In the meantime, grab your free copy of the Profit Blueprint at profitcomesfirst.com. It's the next step to turning your business into a consistent cash flow generating machine. If you'd like to dig more into leading yourself, your company, and building the ultimate life, listen to my other podcast, Richer Soul, where we cover these topics in great depth. There's a link in the show notes. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.